CommitToWealth.com, creating a legacy by committing to real estate wealth.
Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I'm your host, Juan Vargas, bringing you yet another awesome guest. Today's guest is Brett Swarts. Brett is the CEO of Capital Gains Tax Solutions, where he helps business professionals defer capital gains via the Deferred Sales Trust tool. He has experience in not only Deferred Sales Trusts, but also Delaware Statue Trusts, 1031 exchanges, and millions in commercial real estate brokerage transactions. Brett, welcome to the show.
Juan, thanks for having me.
Hey, Brett, it's a pleasure to have you on. So, just like we get every single show started, tell us a little bit more about your background. Tell us who you are. Tell us where you're calling us from, and tell us a little bit more about the Deferred Sales Trust.
Absolutely. So I fell in love with investment real estate and development at a young age in Northern California, helping my dad build homes. And he was an entrepreneur, businessman, investor himself. And from there, I knew it was probably going to be in my future somehow, some way. So I went to college and I played basketball there, and I liked working on teams. And I had a mentor who played basketball, and he told me about a company called Marcus and Millichap. And so in 2006, I joined them as an internship and really kind of learned the basics of investment real estate. And then I started my career full-time in investment brokerage transactions in 2007. And just as I was getting the business going, the 2008 crisis hit. And I'm newly married, baby on the way. And I did what every good entrepreneur does. And they figured out a way to keep the dream alive, right? And as a new dad and as a husband, I'm trying to provide for the family. And so how do I keep it going, and how do I make it work? And it's tough, right? It's like every entrepreneur journey is a little bit challenging. And so I went and not only try to learn more about ways to add value to clients and really kind of survive in the business, but also I wanted to help my clients who and friends and family and who lost everything in the '08 crash. And part of why they lost everything is because they had too much debt and they felt forced and pressured to overpay for properties via 1031 exchange. And so along this journey, I'm trying to make it in the business because it's 100% commission. I'm working side jobs and restaurant jobs at night. And my manager brought in a gentleman to speak on this strategy called a Deferred Sales Trust. And it's like, you ever have those moments when the light bulb goes off in your head and you're like, oh my gosh, there's a whole nother world out there that I wasn't even aware of. And that began my journey of tax deferral and helping my clients escape feeling trapped by capital gains tax and the 1031 exchange so they can create and preserve more wealth. And so I set out on the plan to educate all of them and to become an expert in tax deferral and alternatives to 1031 exchanges. And that's when I've done Delaware Statue Trusts. I've done Deferred Sales Trust, 1031 exchanges, and fast forward over 10 years of studying and working with individual clients, we've now launched Capital Gains Tax Solutions to help every business professional out there, whether it's commercial real estate brokers who are like me, or financial advisors, or business brokers, high-end realtors. And our goal is to equip them with the strategy, and of course the high net worth individual, all so that the business professional can grow their business and really help their clients escape feeling trapped by capital gains tax.
Very interesting. So you have a pretty detailed background there for sure. So tell us a little bit more about the Deferred Sales Trust. Tell us exactly what it is. So I'm a newbie. I'm a beginner. This is the first time I've ever heard of this. Tell me, in those kind of terms, simple terms.
Absolutely. So the Deferred Sales Trust is just a manufactured installment sale. Your listeners would know about it as a seller carryback. And so it's based upon IRC 453, which is installment sale tax code, versus IRC 1031, which is 1031 tax code. So both of those are tax deferral strategies. This one is just unique in that it gives you a lot of benefits. It's kind of like a Swiss Army knife for tax deferral, and it gives clients lots of different benefits. But at the essence of it, it's just a manufactured installment sale.
Okay, so it's a manufactured installment sale. So you have to have the other party's permission to be able to do this. Like, do both parties have to come in agreement to be able to have this be successful?
Yeah, great question. We do put language in there that the seller has the right to a 1031 exchange or a deferred sales trust at no additional cost to the buyer. But from the buyer's perspective, there's no downside. It doesn't matter if the buyer buys it from the trust or buys it from the seller. It makes no difference to the buyer. So although we do ask for cooperation, we've never had a buyer not cooperate, if that makes sense.
Okay. So I think that the majority of my audience has heard of a 1031, right? Maybe they've done 1031 exchanges themselves. And so, I would say that they're more or less familiar with the 1031 exchange. So tell me what the differences are in a 1031 versus a deferred sales trust. And also, tell me the pros and cons, right? Because I know there's some pros on a deferred sales trust, but there are also some pros that we know about on a 1031. So why would I want to do a deferred sales trust when I can simply just do a 1031 that I already understand?
Absolutely. Before we get there, I just want to touch on a little bit of the demographics and kind of the big kind of problems, so we can really focus on some of the details. So,
okay.
Most commercial real estate owners, right, or business owners or high-end primary homeowners, they struggle with capital gains tax, somewhere between 30 and 50% of their gain when they go to sell. And so we use the Deferred Sales Trust, which is a tax deferral strategy. Get it to tax deferral, liquidity, diversification, debt freedom, never have to go back into a 1031 ever again if you don't want to. All that so you can create and preserve more wealth. And so that's kind of defining the problem. And then let's define the demographics of what's happening right now in the world. So according to the American Bankers Association, there's about $17 to $20 trillion that will pass from one generation to the next in the next 20 years. And this is known as the largest wealth transfer in the history of the planet. In fact, there's it's the baby boomers. In fact, there's about 10,000 baby boomers turning 65 every single day, and 77 million in the U.S. alone. And they're challenged with toilets, trash, liability, a business, a high-end primary home. They might have highly appreciated artwork or collectibles, okay? And it's looking at 30 to 50% of their gain being wiped out, and they want to retire. And they want to trade all of that headache and a lot of that wealth for not only tax deferral, but time, travel, liquidity, out of debt, more preservation and more enjoyment of their wealth, and also pass it to their kids in a good way where they don't get completely clobbered by the tax. But they feel trapped. And the reason they feel trapped is, one, the 1031 exchange only works for investment property. I'll say that again. The 1031 exchange only works for investment property. Okay. Mm-hmm. So that doesn't include the primary home. That doesn't include the business. It doesn't include, we're doing a Bitcoin case. We're doing a horse case in Kentucky. We're doing artwork, collectibles, car dealerships, dentists, veterinarians. The Deferred Sales Trust covers all of those. So the first thing is defining the problem and then figuring out what's a good solution for the client. And so let's dig in a little bit more into the 1031 now. The 1031 exchange has some few shortcomings, okay? And the number one has to do with what's called non-optimal timing, or what I like to call rush-forced buying situations, where essentially you sell high, let's imagine, and then you buy higher 180 days later. And Juan, what did our parents teach us to do when we were young? They taught us to sell high and buy low, not sell high and buy higher 180 days later. So too often we found with a lot of our clients, they felt rushed. They felt forced. They felt like they had no other alternative but to buy that property that otherwise they may not have bought, right? Mm-hmm. Especially these last few years, and we're recording this during Corona now, and we're seeing a lot of similarities to the 08 crisis and what's happening now. And I'm really concerned for those who overpaid and took on too much debt. And that's what happened in 08, 05, 06, 07. People love to be sellers. They love to get that high price from that 1031 buyer, but they hate it to be buyers because they have to turn around and buy something within 180 days and oftentimes overpay. And we call that the candle burning at both ends. And the candle represents your return. If you can imagine a big candle, the bigger it is, the bigger the return. But what's burning on one side? Well, one side, what's burning is that cap rates were going lower and prices were going higher. Not good. The other side that's burning is your time is running out, right? And as it burns, you get smaller and smaller return, and then you're stuck with all the debt. So that being said, the first thing to understand is you want to buy at optimal timing, and that's really the intent. buy when it makes sense for you. But you also need to be able to do that tax deferred. And that's where the Deferred Sales Trust enters. We can sell a property, defer all the tax, pay off all the debt, move it into the trust. And once it's in the trust, we're no longer under the IRC 1031. We're under IRC 453, which has no timing requirement, has no like-kind requirement, works for businesses, real estate, primary homes, and you can put it into securities if you want to. You can put it into hard money lending. You can put it into real estate. So that's the number one thing, all tax deferred. The second one is debt. Debt is not our friend, Juan, in a highly appreciated market, meaning it's hard to find forced appreciation deals that make a lot of sense. Rents have been driven up and cap rates are very low. Price per square foot are pretty high. That's not your friend to buy in that market. You want to sell in that market, right? But also you don't want to take on more debt when you do the 1031. So we like to call the Deferred Sales Trust the debt-free plan for your commercial real estate or business, because when you sell, only the proceeds need to go in. We don't have to replace equal or greater value. So that's really good. And I'll tell you a story. We just closed last week. A gentleman was selling a $7.6 million multifamily property in Georgia, and he had about $4.5 million of debt. And he's done hundreds of transactions over his lifetime and countless 1031 exchanges, but he sold right before Corona crisis, and then Corona hits, and all of his funds are sitting at the exchange accommodator. And he's really concerned. He doesn't want to overpay. He doesn't want to buy anything, and the prices were still pretty high for real estate. So what did he do? Well, for the first time in his adult life, he did a deferred sales trust. And why did he do it? Because he didn't want to replace equal or greater value. So that debt replacement's gone, no debt. And he put the $3.1 million into the trust. So now he's debt-free. He's diversified, he's liquid, and he's on the sidelines, all tax deferred, right? So that he can reduce his risk, and also for him, so he can retire. He's part of the baby boomers. He's just like, I live in California. I own the property in Georgia. I was thinking about buying in North Carolina. Like, I just want to simplify my life. I've made enough wealth. I don't want to, get rid of it all and just pay the tax, but I also want to retire. And so that's where we really fill that gap. So I'll pause there. Make sure you've caught that so far.
Yes, I have. So the biggest benefit to doing a deferred sales trust is that one of the biggest benefits, right? And I want to say the biggest benefit, but one of the biggest benefits is that you don't have that timeline that just, overshadowing the transaction or the next possible transaction, right? So versus a 1031 exchange where, you have a certain timeline and you have to get it done by then. If you don't get it done by then you're going to pay the capital gains taxes. Whereas a deferred sales trust, you can have this trust and, sell the property, have the funds sitting there. And then once you have the opportunity, like you said, buy low, the market changes, you're able to just go and buy the different properties that you want. The other thing, I guess you would say is that we can diversify a little bit more, right? So versus, 1031, maybe, there's a portion of it that you can pay gains on it, but the majority of it you would want to use in a 1031 exchange. Whereas the Deferred Sales Trust, you can, put the funds in there and then you can diversify into different asset classes and when you want to do them, right? Is that another benefit of it?
You got it. You nailed it right on the head, Juan. So liquidity and diversification, we think, are the two most important things in today's marketplace, especially if we're going into recession and possibly depression, okay? And so you want to be protected. So how do we do that? Well, as soon as the funds are in the trust, we can diversify them. So they could go into a deal with Juan. And Juan has a multifamily syndication opportunity that he finds a good deal. By the way, the person could put, $1 million into that deal. The other $2 million could be in some stocks and bonds and mutual funds, a small amount. And then the other $1 million can go into a mobile home park fund, maybe in a different part of the country. So I like to say it's a great way to diversify not only asset classes, but also within commercial real estate, within different geographical locations and different product types. And so you can go into senior housing, you can go to mobile home parks, you can go to retail. Retail I'd probably stay away from right now, but multifamily, right? Whatever you want. But you can also develop real estate. So for the developer or syndicator out there, this works for carried interest. And a lot of them are selling, paying the tax, and then going to develop real estate. Well, why not sell, defer all the tax, and use all that tax deferred money to build that real estate? And that's the point. Every deal, you're looking at 30 to 50% in capital gains tax or depreciation recapture. And that's where we jump in and use this tool. So our goal is just to empower the client empower the business professional with the tool so that we're saving that 30 to 50%, which is staggering. If you think about back to the 17 to 20 trillion, how many people are selling every day and paying hundreds of thousands, if not millions in capital gains tax when they don't have to, and they could earn more wealth and they can create more wealth and they don't have to deal with any of the headaches. Like, this is truly, we think, the best way to have freedom from capital gains tax.
So why is it that it's not really, I mean, I guess in your world it is, right? But like, out here, it's not something that's really talked about so much, right? I mean, you hear about the 1031 so many times, and, well, although it's a great option, there's other options, right? And maybe that option is not the best. I mean, if you have a certain property and you want to, is the best price for it that you're getting. I mean, there's certain situations for it, right? But why is it that we haven't heard of the Deferred Sales Trust as much as a 1031 exchange?
Great question, Juan. So remember when I said I grew up in real estate and I've loved it all my life, and I invest, I don't know if I told you, but I invest in multifamily, senior housing, and different things. So I love real estate, and I'm sure you and your listeners do too. But real estate is like a religion. Okay. It's like a religion. And by the way, I'm a part of that real estate religion, right? It's like a religion. And one of its doctrines is the 1031. Okay. And people are trained, and I guess, the information that comes in from your broker, which, by the way, your broker doesn't want you to know about the Deferred Sales Trust. Why? Because that doesn't necessarily lead to more commissions for him. I'm speaking because I am a commercial real estate broker, so I remember those days. We loved having 1031 buyers, right? Or sellers, right? Because it's like the deals are going to happen. We're going to get a commission. So they don't necessarily want to tell you about the Deferred Sales Trust, where you could just be retired from all of that and maybe not buy for 5 or 10 years. They want to keep you in the 1031 race, if you will. The second one is the 1031 companies. They don't want you to know about it either, right? Because they make all their money on the 1031. If you go to Deferred Sales Trust, they're not holding the money. And that's where most of the education right now is in the commercial real estate world. That being said, the Marcus and Millichap, I've been in San Francisco office, the Tampa office. We've been in the Denver office, the Orlando office, all these different offices to train folks. So there's not to say that managers won't bring folks in. It's just the brokers are not getting paid to do Deferred Sales Trust. They're getting paid to do 1031 exchanges. So that's the first thing. The second thing is, though, but the other doctrine, by the way, is an installment sale. Okay. And both of them are very well known. And that's what we are. We're just a manufactured installment sale. We're just creative on how we apply it. Okay. And by the way, it's a proprietary structure that is protected. And part of it, why it's proprietary, is one, we don't want competition, but two, we also don't want it to fail. We don't want anyone to abuse the structure, okay, and then it fails, because it's not just the structure, it's the team which executes the strategy. And that's basically my role, to work with the tax attorneys, to work with the financial advisor, to work with the commercial real estate broker, to get everyone in the room and basically say, how do we perfect and use this strategy to be as tax efficient? So that being said, a lot of people think it's too good to be true because they never heard of it, but we would also just counter that with the evidence. Thousands of closes now, over 24-year track record. Get to know us, bring in your trusted professionals, and make sure that they vet us and ask us the tough questions. We've had 14 no-change IRS audits. The biggest one was a $125 million deal in San Diego as a commercial real estate sale. Not one single issue with the IRS. So those, we've also have national law firms, CPAs. By the way, we have thousands of professionals who have signed up with us. We've done deals with Marcus and Millichap. We've done deals with Keller Williams. We've done deals with just about every title company. And we have exchange companies that work with us. So the counter, I guess the answer to sum it all up, if you don't know about it, it's because you haven't talked to us yet. And that's really as simple as that.
Understood. Okay, great. Has there ever been an example where we say, for example, I was doing a 1031 exchange, right? I was towards the end of it, and my timeline is right here, like coming up next week. For whatever reason, the transaction fell apart. And I still don't want to pay the capital gains taxes. Is there a way that I can still do a deferred sales trust, during at that point, right? Towards it's like my plan B. If I'm not saying that it should be a plan B for everybody, but it was my plan B at that one time.
Absolutely. And by the way, we would say it should be your plan B or your plan C for everybody. Anyone who's listening to this, who's doing a 1031 exchange, should have the Deferred Sales Trust as a backup plan. Two things. One, it doesn't cost you anything. Like, we don't get paid unless you use the structure, right? But two, you never know. The bank may not deal. it may not lend. The seller may not deal. You may not want to buy anymore, right? You may get into a deal and there's so much hair on the deal and there's so much deferred maintenance. You're like, this is crazy. This is not what I was buying. And the seller won't give me a credit. Well, you want to have leverage to be able to bail out and not have to be forced by the tax to force you into the deal. So we would say have the deferred sales trust on every single one of your deals. And if you're not, you're playing with fire, right? And because it costs you nothing. Like we don't get paid unless you do it, but you need to connect with us. You need to make sure everything, the language is all properly set up. Okay. So that being said, we can save a failed 1031. We've saved countless 1031 exchanges. The deal I just talked about, Dave, we saved his failed 1031, right? He was in day about 50 of his deal. And so we have basically a window between day 46 and day 181. So here are the timing. Okay. Either at close of escrow, we send it to the trust, or if it's an investment property and you go to a QI, we wait until day 46 to day 181, and then we default into the deferred sales trust. What we can't do is if the exchange company sent you the money and now it comes into your hands, that's taxable. It's too late. It's over. It has to go from either escrow directly to the trust or from the 1031 exchange accommodator directly to the trust. Does that answer your question?
Yes. So anytime you have it in your possession, you're going to pay tax on it. Is that correct? I mean, just to clarify,
exactly.
right?
Anytime you send it to the deferred sales trust, you're going to remain tax deferred. And we would say, isn't that amazing, right? I mean, why would you pay the tax, especially if it's big enough? By the way, we might as well touch on the minimums. The minimum is $500,000 and $100,000 of tax liability. So $500,000 proceeds, $100,000 of tax liability. If it's smaller than that, just pay the tax. But if it's bigger than that, we think we're a great fit because the ROI on the return offsets our fees and you actually make more wealth. Our average deal is $2.6 million and we're deferring somewhere around $400,000 to $500,000 in tax.
Okay. Speaking of fees, let's talk about that a little bit real quick. You know, what are the fees that somebody can expect? Is there a certain percentage, a certain, set costs that we can expect?
Yep, it's fixed. So, by the way, most of our notes go for 10 years. At the end of 10 years, you can renew, pass it on to your kids and just keep it going. Most of our notes earn 8% on any given 10-year period of time and then net the client about 6.5% on a cash flow basis, okay? Now, at the end of the 10 years, though, we're going to net of fees. Our target is 8%. We can't guarantee where that's going to be, but that's what we've been able to do on the thousands of transactions so far with the financial advisors we work with across the nation is exactly that. That being said, what are the fees? So basically closing cost, you're looking at a one-time fee of 1.5% to the tax attorney. And that covers legal and audit defense, which is very important. You want to make sure you're protected and that the attorneys stand behind their work. And that's for the lifetime of the trust, the legal and audit defense, okay? And so that's that. Now the second fee is a combined fee, basically to the financial advisor and the trustee, which is my company, Capital Gains Tax Solutions. Now we're not the financial advisor, but combined it's about 1.5%. Okay, and so and hopefully we've earned the 8, and that's how I said we got to that 6.5%, right? And so that's once a year at the anniversary date. Does that make sense?
Yes. Okay, so 1.5% for a tax attorney for the lifetime of the trust, and then another 1.5% that'll be combined for your company and also for a financial advisor that you have working on your trust. Okay, correct. Got it. Okay, so when should someone expect, or when should someone ideally reach out to someone like yourself, right? I mean, if I'm not for sure right now that I want to do it, the Deferred Sales Trust, I'm thinking about it. Maybe I'm going to have a sale. Should I reach out to you, 2 months in ahead or like right whenever I have a contract? When's the ideal time?
We think the best time is now, meaning if you want to create and preserve more wealth and create what's called a tax deferred wealth plan, right? Ideally, you're exploring all of these tax deferral strategies before you're in the emotion of selling a property and you got 21 days to close and there's all this stuff moving. You just want to be clear-minded and you want to bring in your trusted professionals and, ask all the tough questions and really understand it, get educated. We want to educate you and really grasp it so you feel empowered by it. And that's really our goal. Our goal is just the guide, right? We're just going to guide you along the way. We're going to guide you through our deals, and we're going to educate you. And then you're going to bring in your trusted advisors to get their blessing, right? Boom. And now you have it. Just like the 1031. Imagine 25 years ago, Juan, you didn't know about the 1031. And then all of a sudden you learn about it, right? And then you get empowered by it. How much does that help you to grow your wealth, right? And have strategies. So and I'll touch on two of those too, by the way. Part of what you'll learn in the education is how to get a brand new depreciation schedule. Okay, so with the 1031 exchange, you don't have a brand new depreciation schedule. In fact, your depreciation schedule travels. So we'll walk through an example, Juan. Imagine you own a $10 million multifamily property for the last 27 and a half years, okay? And imagine you took all the depreciation, so you have zero depreciation, okay? Well, if you sell and buy another property worth $10 million, guess what? You still have a zero depreciation schedule. But if you sell and buy that same property after you sold, you put the funds into the trust and bought that property, you get a brand new $10 million depreciation schedule. So that's really powerful. So as soon as you understand that, and as soon as you execute this strategy, you could have bought the same property you would have bought with the 1031. You just buy it through the trust. All of a sudden, those fees just go out the window because you've just saved maybe hundreds of thousands, if not millions of dollars on income tax, right? Because you've been offset it with the depreciation. You can also do accelerated depreciation on that new deal. And the second one is the estate tax, okay? So if any ultra high net worth individuals are listening to this podcast, understand that the estate tax has nothing to do with capital gains tax, okay? So a lot of people have this misconception that I can just own real estate, 1031, die, get a stepped up basis, and I walk away tax free. It's true you can walk away capital gains tax free, and by you, it's really your kids, right, or your heirs. They can walk away capital gains tax free, but it has nothing to do with the estate tax, okay? So the estate tax is anything above and beyond the exclusion amount. So $22 million if you're married and $11 million if you're single. So let's imagine, Juan, you're worth $52 million. Let's imagine all of it's inside your taxable estate. You die, you get a stepped up basis for the 52, your kids do, but that other 30 million, the 52 minus the 22, which is 30, is going to be hit with a 40% death tax. That's painful, right?
That is very painful, yes.
So the intent is to get it outside the taxable estate. The challenge is the 1031 doesn't do that. Now, most people do these gifting, but they run out of gifting, and they run out of time. They can't get it out fast enough. The solution is to get it out all in one day in one transaction by selling, let's say that was a $30 million apartment complex, and moving into the Deferred Sales Trust, and also moving it outside the taxable estate, one day, one transaction, and you just saved your estate, Juan, $12 million, which is 40% of that $30 million. So those are the reasons why we want to have this tax deferred wealth plan created. We want to essentially take a snapshot of everything you have going on and chart out the course of it. And one course is just stay with the 1031 and keep doing that, or one course is go with the Deferred Sales Trust. And then we start doing the ROI for all of the benefits on this side, and we do the ROI for this side. And you match it up and you decide what you want to do. But we think as soon as you get empowered with this, it'll change the way you sell and buy real estate forever. Also, by the way, remember, it works for businesses. 1031 doesn't work for businesses. It works for works for Bitcoin. It works for high-end primary homes. The 1031 doesn't work for those things. It works for private and public stock. It's also a seamless partnership separation. So we want to touch on the syndicators out there who are listening. Right now, as a syndication, most of the syndicators we work with are operators. They don't allow 1031 into their deals. I mean, they might carve out a TIC, tenant in common for some, but most of the time it's just too complicated. They also don't 1031 out of their deals, meaning everyone brings in, pays their tax, comes in with the money, and then they sell this big profit. Everyone pays their tax, and they bring it to the next deal. Well, guess what? The Deferred Sales Trust is great because the whole entity doesn't have to move. We could have, let's say, 10 investors, Juan, and all 10 could have their own individual Deferred Sales Trust. And we're saving that 30 to 50%. Okay. Now follow me here. Some of them may not want to do a Deferred Sales Trust, which is fine. Let's say 5 don't want to do it. They just pay their tax. The other 5 can. We don't have to follow the rules of the whole entity moving like the 1031. So we have a seamless partnership separation. And again, it also works for carried interest, which is capital gains tax, right? If you didn't know that. And so this empowers the operator to not only attract more wealth, because someone might sell a high-end primary home or sell a business or sell Bitcoin or sell something, and then put it into the trust, and now they can invest into your syndication. And it also empowers the syndicator on the way out to give more of their investors a better return on their money because we're saving that 30 to 50%. So I'll pause there. I said a whole lot. Make sure you caught all that.
No, I did catch it, but I liked what I heard, because as an operator, as a syndicator, I can give that option to my investors and have them either come along for the ride, or maybe they want to pay their fair share of their taxes as well. But it gives them that extra option that, hey, you can still defer your taxes here, and you don't have to pay your taxes right now. I mean, there's options out there versus doing a 1031 where it's that one entity that has to be the one that's doing the 1031 exchange, and so everybody that has ownership in the entity has to come along for the ride. Yes, there's some people that can still back out and kind of go along on their own way, but it's still one entity, right? So everybody,
Precisely.
and your method is kind of like on their own versus this one is everybody's kind of together, right? So
Precisely.
It gives you more flexibility.
Total more flexibility. It's seamless partnership separation is what we call it, versus the very strict, restricted 1031 whole entity must move.
Got it. I really like it. So thank you so much for sharing that information as well. I mean, I think it's very powerful for the guys that are syndicators out there, for the investors that are out there that are also listening. It gives us some good options. So Brett, it is time for our nuggets of wealth. These are questions that we ask every guest every week, and hopefully they are able to help out our audience. So question number one is, where can my audience go to learn a little bit more about the Deferred Sales Trusts and how they work?
Absolutely. They can go to capitalgainstaxsolutions.com. You can also search Capital Gains Tax Solutions podcast. I also have a YouTube channel, which is really helpful. We do these little 3 to 5 minute videos, and I've had some webinars on there as well where you can really kind of break down to see how this thing all works. And you can subscribe and get those about once a week on those videos. And the last thing is we have a guide, a free guide. It's called The Escape Feeling Trap by Capital Gains Tax. And it's a quick 4 pages, but that'll give you the major benefits and the brief overview of what this is and how it works, and so you can go there and you can download that guide.
Okay, and that guide is at capitalgainstaxsolutions.com.
Correct.
Okay, got it. Okay, so what is a good tool, source, or platform that you use almost daily that can also help my audience?
Absolutely. So kind of a digital tool resource we use quite a bit is called Loom, Loom. And it gives you the ability to create short videos and send them in emails or tutorials of what you're doing. Right now, the world of automation and everyone's online, it's more important than ever than to have an opportunity to track and to record what you're doing so that you can delegate and free up your time and energy for other tasks that make more sense for you.
Okay, I haven't heard of that one. So Loom. So check it out, guys. Loom. What book are you currently reading, and which book has had the biggest impact on your life?
Yeah, thanks for asking. So right now it would be the Seasons of Life by Jim Rohn, Rohn, and it talks about basically spring, summer, winter, fall, right? And the human condition. We're constantly in different seasons in different areas of our life, whether it be our finances, whether it be our career, whether it be our health, whether it be our relationships. And it paints a beautiful picture. Like, for example, right now, the world is in a health crisis. We're in a winter, but it's also an economic crisis too. I mean, it's part of why it's been hit so hard. And so this winter, but there's hope. There's going to be a spring, right? But it's our opportunity to persevere during this time. It's our opportunity to do the things to reflect on things that are most important to us. And it just does a beautiful picture of painting the spring, summer, winter, fall. And likewise, if it was summer, let's say economically, it was summer 2 months ago, right? Well, it talks about not taking for granted what you have and taking advantage of the harvest, right? And so it's just a beautiful picture of all of that. So I would really recommend that. And then the book that's had the most impact on my life is the Bible. I'm a Christian. I follow Jesus, and he's my Savior. He's my Lord, and he's given me all the gifts I've been given so that I can be a blessing to others. And so I read that every day and try my best to follow it.
Awesome. Yeah. Well, thank you so much for sharing that as well. At the end of your life, how do you want to be remembered?
Yeah, I want to be remembered by my family, right? That I put them second before God, and I love them and serve them and sacrifice for them. I want to be remembered in my career for empowering professionals and empowering individuals to have a wealth plan that not only defers tax, but also empowers them to give more to those most in need. Part of the $17 to $20 trillion staggering once in a lifetime opportunity to help these folks defer this tax is not only helping them create and preserve more wealth, but it's unlocking capital and these illiquid assets, and it's creating opportunity for income, which can help those most in need right now. And so part of that vision is to support charities that I'm passionate about, but also for what the clients are passionate about, whatever they want. And so one of those ones is Agape International, and it helps to free kids that are being humanly trafficked in Cambodia. And I actually just did a episode on that for my podcast. And we have these SWAT teams, which is amazing, or they do. We support it financially, that go in, that are partnered with the Cambodian government, that are Americans, that go in and bust up these really dark places. So I want to be remembered as unlocking capital, millions, if not billions of dollars of capital to help those who are hurting right now. And we have a chance to do that collectively if we can empower people with tools such as the Deferred Sales Trust.
That's awesome. Yeah. Okay. That's very awesome. I appreciate you sharing that as well. Agape International, Cambodia. So last but not least, where can Commit to Wealth Nation go to contact you? I know you kind of already given us, some resources to find a little bit more about how a Deferred Sales Trust works. But where can my audience go to, reach out to you directly if they wanted to find out a little bit more and maybe, get engaged with you?
Absolutely. They can go to my website, capitalgainstaxsolutions.com, and they can schedule a free one-on-one consultation call, and we can walk through it. They can also go to Facebook, LinkedIn, and just search Brett Swarts or Capital Gains Tax Solutions, and we can connect online as well.
Okay. Well, thank you so much, Brett. I really do appreciate it. I think this also helps my audience to have another option that they can think about, whether they are a passive investor or they have their own, real estate, you name it, business. That's the beauty about having a Deferred Sales Trust is that you can have so many different options, and it just opens it up so much for them. And I appreciate you sharing that information, and hopefully my audience does find it very valuable, and can reach out to you as well.
Thanks, Juan. My pleasure. And yes, please feel free to reach out to me if I can help you at all, or encourage or educate you on the strategy. Thanks so much.
CommitToWealth.com, creating a legacy by committing to real estate wealth.